Welcome everybody to the Chinchilla Pickin' Podcast. It is November the 2nd, 2022. Yes, I am laughing as I read this. We, as always, hope to be entertaining, educational, and uplifting because we want everyone to make money. As always, my name is David Underwood, and as always, I'm here with Brandon Beaver. Brandon, why are you making me laugh at the intro? You know,
that was just... you did that.
I do want to say, hey, all right, so before we get into anything stock or investment related, I know everybody always has like a minute or two of fluff at the beginning of the show. I do want to spend a minute or two on, did you get a Powerball ticket?
No. Why?
It's like 1.3 or $2 billion for the winner.
Oh, see, I don't pay attention to that stuff, but I might now that you're telling me. Maybe.
Well, the drawing's in like 2 hours from now, so I don't know if you're gonna be able to make it.
Is it? I thought lottery drew at like 11.
I don't know, man. I really don't know. I thought it was 7.
Yeah, I don't gamble. I'm not a GameStop investor.
Oh, dig, and the burn was felt.
Although you do have a better chance to make $1 billion than you do to get rich off GameStop, from the Powerball.
Well, now, yeah, because GameStop's been evaluated more correctly, but it still has more downward to go before it's correctly valued. Can they get any worse quarters? I mean, they continue to lower EPS every quarter without fail, and I'm like, how can you get worse? Can you really find a way to make it worse?
Yeah.
They seem to. Anyways, no. Powerball, someone's going to come out big winner. I will admit I did buy a ticket. So it could be me. Probably not, but yeah. Someone will eventually be a winner and a billionaire, and that's good for them. I wish them luck. But yes, you're right. Gambling on Powerball is not the best investment strategy. I do know some people that are borrowing money to buy tickets, and I just blows my mind. I'm like, why?
It reminds me of people who use margin to buy options.
It's the same thing. It's really the same principle. So people, all right, and that's a good point because people understand when I sit here and I say, why are you borrowing money to buy a lottery ticket? But then when you say, why are you using margin on options? People are like, whoa. And I'm like, no, it's the same thing.
Yeah. You could take a credit card to a casino and it's the same thing.
Yeah, exactly. You don't need to be doing that at all. I mean, come on, people. Let's get real for a moment. Like, because, you and I just never get real. Let's get real about this for 1 second here. Talk. All right. Seriously, though, guys, if you're listening, we appreciate it. We thank you. I will say that if you are listening and you like what you hear, please hit the subscribe button. Go ahead and follow us. Reach out to us on our social media. We try to do the best we can. We are very busy, and it's just Brandon and I. Unlike other people who have podcasts on social media, we don't have a team working for us. It is just I. So we may not get back right away. We are not the quickest, but we will get back. And if you want any real comments, please go Brandon Beaver at chinchillapicking.com. He checks that email every single day. Just go ahead and
check that email.
Send him something. I don't know why we pay for that email for you, because I don't know the time you have checked it.
I don't even know my password to it.
We pay for this email for Brandon, and he never checks it. It's a running joke. But yeah, you can reach us on Stock Twitch. You can reach us on Instagram. We do check those. Those are common ones. TikTok, we're on TikTok. We've been doing well.
I'm always on TikTok. Always on TikTok. And it's been doing all right.
I'm never on TikTok. I only check TikTok because we are on TikTok and I look at how we're doing.
Yeah. Well, the amount of exposure you get from TikTok is it's crazy. Like the amount of exposure we've got, I think it's been like, I don't know, maybe 2 months, 3 months since we've been on it. It's pretty wild. Reels need to catch up, for instance, for Meta. For sure they need to catch up. Although TikTok is not the death knell to Meta like everybody's claiming it is.
So hold up.
What's hitting the Meta stock?
We're gonna get into Meta. I'm going to give you an opportunity to talk about Meta because since the last time we're on the show, there's been some moves and news in Meta, and you have been vocal about your position in it. So I'll give you an opportunity to talk about it. Let me go over the rules real quick, and then we can get into Meta because I feel like
my head's gonna explode.
I know. So just give me 1 second, Brandon.
I just went from having nothing to say to having my head explode.
All right, guys. So rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live discussion here on the show. We are doing a new format for this show, so we're going to see how it works out, see if it does work out. I think it will work out. Brandon's a little pessimistic, so prove me wrong. Everybody, let us know how we do on today's show. DM us and let us know if we did a good job. Brandon, Meta, go ahead. Let me know your thoughts.
Wall Street's so short-sighted. What's killing Meta stock right now is, first of all, overall market sentiment with tech doesn't help. But second of all, and I think this is the majority of it, it's the money that they're spending, the earnings that they're spending on investing in Meta and the metaverse. It's the $10 billion a year or whatever it is that they're spending every year that takes a lot off the top of earnings per share and hurts the margins. That's what's hurting it. TikTok is heavy competition, enough for Mark Zuckerberg to mention them constantly, or well, not constantly, but quite a bit on conference calls. But I mean, this is a company that's still bringing in $27 billion of revenue for the year. So they're not, being obliterated by TikTok by any means. Everybody still uses Facebook, except for Dave, but most people still use Facebook. Let me put it that way. And, you have to put your ad dollars into Facebook if you're going to be effective with advertising at all, and Google. But Facebook's not going anywhere. TikTok's not putting them out of business. That's all a myth. And the short-sightedness of Wall Street right now. Let me tell you something. Everybody's laughing about the crash and fall of Meta and Zuckerberg's loss of equity and all of that stuff. But in 5 years, he's going to own everything. He's going to own your eyeballs, everything you're looking at.
Yeah, and here's a couple of things about the TikTok angle here. I will say, with the gram and a lot of celebrities and popular people still holding on to Instagram and not willing to drop it for TikTok, even though if you watch Wall Street on HBO Max, if you have HBO Max, they have a show called Wall Street. It's about Mark Wahlberg and all his businesses. It takes the business aspect, not the acting, but the business aspect of all of him, what he does. And TikTok sent out people to his house to try to convince him to drop Instagram and join TikTok. And he's not willing to do it, and other people are not willing to do it. What is my thought is TikTok going to be like Snapchat, where immediately they came on the scene and they took away a lot of people from Facebook and Instagram, and then all of a sudden now they're falling down and off, and they're not as relevant as they were, but Facebook and Instagram are still there.
You know what? I don't know if TikTok remains legal in the United States. If regulators don't block it and ban it completely from the US, I think it sticks around. I just think it becomes something else that takes up, time of people. But I think it lives side by side with Facebook, and I think pretty easily and easier than people think.
So is my comparison to a Snapchat fair?
No, because I don't. You know what? I haven't. It's not a public company here in the United States. ByteDance is I think maybe public in China, but I haven't looked at the books, so I don't know if they're losing money or not. But Snap's never really been profitable. So
right. So is TikTok ever profitable?
I don't know. I'm not sure.
Question.
I'll be honest with you. That's a good question. Yeah.
Something to think about. But yes, I believe in Meta and the metaverse and the whole VR. Me mainly because of gaming. I like the gaming aspect of it. I love the new VR headset. I have a lot of these software programs already, and I can't wait to buy my new Meta VR headset. But I will fully admit to anybody, I'm one of the rare. All right, I am not one of the masses. I am a rare person on my own, doing my own kind of gaming thing here, and I like the way that they're going, but that's just me being selfish, and I like the games on VR. So, yeah.
Look at me fact checking myself. Looks like the last quarter for Snap was profitable, but not consistently profitable. Let's put it that way.
There you go. See, live podcast, guys. You hear Brandon correcting. He already's repeating things he has said. All right. Oh, good to hear that. Good to hear it. All right. So we weren't even meant to talk about Meta. This was just a whole side discussion that just got started here.
It's just what's going on with Meta stock right now is it's a whole bunch of short-sightedness, and they can be short-sighted as long as they want. It gives us more time to snap up more.
I mean, seriously, is that what you're doing? Are you dollar cost averaging DCA?
Yeah, it's been pretty painful. I'm not gonna lie, but I also
like me with Intel. You're like me with Intel.
Yeah, I'm still comfortable. Well, probably worse, but I'm still comfortable with it. What are you gonna do? You know, you buy it cheaper. If it goes cheaper, you should like it more.
Right? Yeah.
I mean,
no, I completely agree, man. I agree.
And
well, while we're on,
that's happening right now, everything that's happening right now, the stock is stuff that Zuckerberg started warning us that he was going to do when I first invested in it. So I can't be too surprised by it, right?
Right. So all right, I want to shift gears here because we weren't meant to talk about Meta. I did have another topic I did want to talk about. And this is something that's been more in the headlines recently. We just started on Meta because you had mentioned it last week and the week before, and I want to follow up on that. But something that's been more in the headlines recently, and that is Tesla, Twitter, and Elon Musk. Right. So I know everybody's got opinions on this. And if you're listening right now and you're like, are they ever going to talk about the Fed? We're going to get to the Fed here shortly. All right.
Well, like the last year of episodes, we've talked about the Fed. I'm so sick of them.
I know, but they had the big announcement today. We got to talk about it. I want to talk about Elon Musk, Twitter, and Tesla. Right. So there's three different stories here. There's the Elon Musk. You could talk about him as a person and a business owner, or you could talk about Twitter and Tesla, right? Which are technically two separate companies that he owns. They're separate. They run differently. They have their own boards, their own, what have you, right? So Twitter, the thought is...
1 second. Tesla no longer has a board of directors. It is only Elon.
Nice. There you go, man. Nice. Are you talking about Twitter or Tesla?
Twitter.
Yes, no Twitter. Thank you. You said Tesla, so I was yeah. Well, once again, it's the second time the show we've corrected Brandon. We're gonna start tallying up how many times Brandon has to correct himself here on today's show. All right, so Twitter right now currently has no board of directors. We understand that because Musk basically took it private, which I think is good for Elon in the fact that he wants to go ahead and Elon wants to go ahead and change a lot of things, and it's a lot easier if you have a private company than a public company to change it. You know what I mean? Yeah. You get more control. You're able to move faster. There's a lot of concerns coming out that he's having employees work 80-hour weeks, sleeping at their offices, and just waking up. Brandon, you know nothing about working 80-hour weeks, right? And then
I never will ever do it again. Ever.
So
not for somebody else. I'll do it for myself, but not for somebody else.
Right. And so you hear all these things coming out of Twitter, but then he's asking to make a lot of drastic changes. And so it takes a lot of effort to make these changes. Do you see these changes that he's making at Twitter being effective for Twitter going forward? Is it going to make it more profitable? Are they going to continue to lose people basically using Twitter, or are they going to grow? What do you think?
Oh, man. Loaded question. Well, first of all, when you're working 80 hours a week, you're going to burn your best people out. So there's that. That is one thing that Elon has said that I completely disagree with. Work-life balance is important. Second of all, he's really smart. He's really intelligent. He's got the sense of humor and, maturity of a 6-year-old, but he's really smart. And quite frankly, that's why I identify with him, because like kind of the same way. But yeah, I don't know. You know what? The celebrity, like, I think celebrities were more of a detriment to Twitter than anything else. The Instagram posts where you're posting all your shiny things and your cars and all that stuff, celebrities really are an added benefit to Instagram because of that. But the political nature of Twitter I think people just got so sick and tired of the arrogance of people that think that their opinion should matter that much more than theirs. So I'm backing off a little bit, but I actually think it's probably a good thing. The blue check mark deal, listen, if you're not going to pay $8 a month for it, if you know what, if you're a celebrity, you've got the money to pay $8 a month for a blue check mark. If you don't have the money to pay $8 for a blue check mark, you probably should have never had the blue check mark in the first place. That's another thing about Twitter that used to irritate me, because there's so many people with blue check marks. They're just like handing them out left and right. Like, anybody who sold anything to the public got a blue check mark.
You know, and Twitter was going to charge, before Musk takeover, was going to charge $24 a month for the blue check mark. He actually lowered the price that he's going to charge.
Yeah, he started with
individually.
20, and then Stephen King whined about it. And then he said, how about 8? So we'll see what happens. But, you know, I mean, he's got to find new ways to make revenue for a company that should have been profitable a long time ago. Reminds me a lot of Robinhood. Lots of users, lots of potential, but for some reason you just can't tap into it. And Twitter is, you know, the same way. They've never been profitable, despite the fact that like billions and billions of people are on it.
Yeah.
And some of the most influential people are on it. How are you not monetizing that? He's got to monetize some way. Charge him for the blue check mark, that's fine. And if less celebrities use Twitter, then that's probably better anyways.
Gotcha. All right, man. All right. So let's transition then over to Tesla, because this is where I want to spend most of my time. I have a couple different articles that I've read the past 2 days on Tesla. All right. So the first article I read on Tesla was stating that analyst that has been covering Tesla now for years is saying Tesla's underperformed, that it's not something you want to invest in. They're not going to keep up with the growth they're having. And I understand this analyst is probably really good at their job and they've been following Tesla for a while. I completely disagree. I've been following Tesla for a while. I see huge growth in Tesla. I look at the fact that they can't make enough cars fast enough. That if you go into a Tesla dealership today, they said, man, I can't get this ready for you for another couple of years. I mean, people are buying Tesla cars years out because that's the backlog they have.
Yep.
And you're going to tell me that they're not going to be able to grow? I'm like, you kidding me? They can't even keep up with the orders they have now. They're a very successful company as far as cars. Don't forget, though, they also do solar panels. They also do batteries for your houses, backup generators, which that's a hugely growing business. I'm talking about not a huge business, but the fact that it's growing so fast around the country is good for people who want to invest in Tesla, because that's another part of the business. Goldman Sachs, I believe it was either today or yesterday, came out and said that the humanoid robotic industry, which is brand new, right? Robots that look like humans, built like humans, doing human tasks, everyday tasks such as warehousing or picking, packing, manufacturing, plant jobs. That industry is going to grow to be $10 billion plus in just less than 10 years. And guess who's competing for one of the top spots in building humanoid robots? Tesla. All I'm saying is Tesla is growing in the areas of future needs now, with Starlink, with SpaceX, with humanoid robots doing the work, with all these other inventions and goals of heading these goals. Tesla is doing the groundwork now to grow in this, with the Hyperloop. The Hyperloop. I mean, have we forgotten about that?
Yeah. Well, Tesla and SpaceX and Starlink are all 3 separate companies. So
yes, and the Hyperloop's a separate company, and the Boring Company's a separate company, and Twitter's a separate company. Do you guys see how many companies Musk owns? I'm just saying, right. Tesla is part of this whole infrastructure of companies. You don't think he's going to use them to help each other?
I'm sure they'll be in everything app. They've got them in China. I mean, like, they've got everything apps in China that are very, very popular. So why not do it here? He's got the tools to do it. And I think, honestly, right now, and I know Tesla has been my white whale, and we've discussed this at length. I think it's fairly valued right now, but that means that you could probably leg into it and then just dollar cost average down. Right now, nobody wants to be in a high beta stock, especially when volatilities to the downside as much as it is and has been for the past year. So it's probably got some more downside to go, but your returns over the long term on that are probably going to be really good if you start legging into that. And I'd say the same thing about Google, which I started to do over the past week. But
I'm pulling up the chart on Tesla. I see that 214 a share, and you know what? I tell you what, I'm going to go on a limb here, man. Short to medium term range, I see that as a buy.
no, and maybe I don't know.
And long term, it's a hard buy. It's a hard buy for me long term.
Everybody pays it, and I've talked about price earnings ratio at length on this podcast as well. But when it comes to Tesla and even Google, like the price to earnings ratios, if they're high, it's not that as big of a deal. What you really want to look at is the price to earnings growth ratio, which measures price to earnings and then divided by they can either do it one or two ways. They can do it over the expected growth over the next 12 months, or they can do it over the trailing 12 months that have already happened. And either way that you're looking at it right now, it looks like to me, Tesla's 1.94, usually around 2 for them is about fair value. So it's maybe a little undervalued, but not much. You really want to look for a PEG ratio under 1 if you're going to buy something that is, super valuable. But with these kind of companies, looking at the PEG ratio, I think is more of a tell-all than the PE ratio. And Tesla, if you look at the price earnings ratio right now, 70. A lot of people will look at that and say, "Wow, that's really high compared to the S&P 500 right now." But you have to take into effect their growth because they are still a growth company. And if you look at that, and if you look at the growth for Google and stuff, you could start legging into these stocks right now, as long as you could stomach the volatility of Tesla over the next 12 months.
Well, how about this? Can you stomach a Tesla plant with no people working in there, and the only people there are maintenance technicians who work on the robots?
Yeah, if it happens.
In less than 10 years. And that means they don't have to pay for any health benefits, no HR benefits, no workman's comp benefits, no pension plans, no 401ks, nothing, except for just a handful of maintenance workers that maintain the robots.
And the growth there would be huge, but when is that going to happen?
Well, I mean, here's my question, Brandon. Do you buy in at a company after the growth has already happened? Or do you buy in a company when you see the growth that's going to happen?
Well, it depends on the philosophy of the investor. Some people do it one or both ways, I bought Disney. Was
Okay.
so it's still a good company, but it was a value company, right? It's established. So do you buy after it's established or before it's established? How many Amazons and Teslas are there in the world? So many people are out there trying to look for the next Amazon or Tesla, and they're guessing that it might be Jemiah Technologies or something. And I think they're out of Africa, if I'm correct. But what are the chances that they'll be the Amazon of Africa or Europe or whatever? Who knows? So it's probably not very good. But those people take those risks, and other people prefer to sit on the sidelines and wait for the price earnings ratios to come down. And either way could be respectable. I'm going on a rant here, Dave. This is what happens.
You are, but I'm letting you because you're explaining different perspectives and views here. And I personally had the perspective and view, and I just called it here today at 200. Let's just say 215 flat, $215 a share of Tesla. I'm a buy, and it's out. What is it? November 2nd.
I think you could leg into it. I'm not, but you could. I legged into Google.
There you go, man.
I do believe that we still have this thing behind me, this recession, ongoing, and I still think that it's going to get deeper over the next year. So we'll see.
It is ongoing, and yes, it is going to get deeper. I'll give you that, and it needs to get deeper, and that's the only way we beat inflation is by pulling the economy down a little bit and slowing it down, which is the whole reason why Feds are raising rates. Brandon, take it away on Fed and rates.
Oh God, I don't even want to talk about it anymore. We just have to. Of course,
no, we have to. You have to.
They told you they were going to do this. So frustrating. This is why I don't want to talk about it, because I got so irritated over the past month that everybody's saying that the Fed's going to pivot. The Fed's going to pivot. Meanwhile, Jerome Powell's like, "Hey guys, we're not going to pivot. We're not going to pivot. We're not going to," and they were like, "Well, is he going to say probably? We're probably not going to pivot." And I was sitting there watching the speech today, And you could tell that the computers and the algorithms were going crazy, because with every word that he was saying, the Dow was jumping 100 points, or, at one point they were up 400 points. And then like 2 seconds later, it was like negative again, because of the words that were coming out of his mouth. And you could tell these computers were programmed to recognize certain phrases that he may or may not say and then trade off of them. And then for anybody who still believes that the market efficiency theory still exists, the fact that the Dow went from 400 to down like negative 300 in minutes today, just off of words that the Federal Reserve Chairman was saying, that proves you wrong. It proves you absolutely wrong. Just indiscriminate selling based on him telling us what we already knew.
So, all right. So I want to say this though here real quick. I saw this back in 2008. Every time the Fed would come out and they would lower rates, I've talked about this many times. I would trade the insurers and the reinsurers, the John Rays and the Ambacs and all of them. At that time, I was trading those because I knew what the Fed was coming out, what they were going to do, and they're always going to lower rates. So I was trading ahead of time. They're always going to have these computers and these bots, but it's an opportunity if you have like, all right, the Fed's definitely going to have to raise 75 basis points because the economy is still hot. They have to.
Yeah.
So that. So you wager, you put your money in and you do some puts the day before and you're right. And then boom, you take your money out.
Inflation,
and it's not that hard. It's not that hard to make money in this market, man.
Inflation has not come down. Inflation hasn't come down. Wage growth was still strong. Employment hasn't come down. We've seen these numbers in the past week again. That just reaffirms that inflation's not going anywhere until the Fed continues to raise rates. Why would they pivot? What sense does that make? I think what they're going to do is they're going to do another 75 basis point in December. And he did say today, and this is one of the times where the Dow jumped like off the words that he was saying. He said today that they might take some time and let the lag catch up, and I think that computers were programmed to recognize him, at least acknowledging a lag between what happens in the real economy and between what the Federal Reserve is doing right now. And so when he said lag, the Dow jumped. But then once he said, oh, we're going to keep doing this for the time being, and there's no reason to pivot, then the Dow went back down again, like instantly, though. This wasn't people trading. People didn't have time to pick up their phones and make the trades, or get on their computers and make the trades. It was just so quick. But
that's my point. Like
right?
We're talking over each other. Go ahead. You first.
I just don't. We call what you said before, that the market was going to bottom in October. We hit, we tested the lows of June again, and I thought, Dave, you might be right. But I really don't think that this market's going to bottom until the Fed is done raising rates and we actually see what happens to the economy as a result, and we let the economy catch up with what's going on. Now, I know that the investors are always trying to think 2 or 3 steps ahead, so the stock market often front runs the bottom of whatever recession happens. But we may have, a rally in between the peak of inflation and deflation kicking in. So once we start to see inflation, really peak and come down, there might be a rally there. But then the second devil's on the other side of this, and that's deflation. And what happens there? And is it because people's bank accounts are dried up, or is it because the supply chain has gotten even better and than what it has been in the past? I shouldn't say even better because it wasn't really that good, but the supply chains got better, and because energy prices have come down. That's what we really need to see. Is inflation coming down because transportation costs are going down, or is it coming down because people's savings accounts have dried up and they no longer have any money to spend, and we can't support high prices in the economy anymore? Go ahead, Dave. I see your hand raised.
So many things to unravel here that you covered. I wish I was taking notes on all the topics so I could go back one at a time here and hit them. I will say, yes, you can make money in this. You don't have to be a robot, because you could have did a put yesterday knowing that the Fed was going to do 75 basis points today. We knew that was going to happen. it would have been a safe move to do in my mind. Secondly, yes, we do need the economy to come down more and slow down for it to happen. The supply chain, though, you made that comment there. I don't see the supply chain getting any better right now because we have that concern over the diesel issue currently. But I mean, people are saying we're trying to work through that, and I just want to. I want to break away from our topic and then go right back to it. I just want to clarify something for anyone who's listening is like and is concerned about this diesel issue. Let me clarify a couple of things. It doesn't mean that we have 25 days left and that's it, and then we're counting down from 25 down to 0, and then we're done. We're out diesel. It's kind of like a rolling number. So you always want to have X amount of days, like 6 months worth left or 4 months worth left. You never want to get down too low because we always have diesel coming in. It's just, is the amount coming in able to keep up with demand and have that buffer? And right now that buffer is only 25 days. And that's a low buffer. We haven't had the buffer that low in October since 1982. Now we see buffers drop that low in like 2008 in the spring. In the spring, they drop. The buffer always drops for diesel distillates, but in the fall, you typically have it higher because of a buildup of diesel. And so that's a concern for the supply chain. Are we going to have enough of that? Are we going to have enough drivers for the supply chain? So the supply chain is barely hanging on. So I think it would be good for the supply chain for us to have a recession more deeper and for the economy to slow down because it'll give them a chance to recover, recoup, and rebuild certain areas of it. So it would be good for that. We need it also for inflation, and we're not looking for 0.5 inflation drop. We're not looking for 0.8 inflation drop. We're looking for 2 to 3% drop in inflation. At least before the Fed says, all right, I think we're on the right track now. They need percentages, not points. So they need percentages.
So another thing that sent the market lower today pretty quickly was when Jerome Powell said that he's still hanging on to his 2% target. So there's a long way to go.
That's I mean, 2% is a little low for inflation, but yeah, I mean, sure. And if we could get it down there, that'd be nice. That means everybody would be doing well. We have inflation, which you need in a healthy economy. You don't want deflation, but at the same part, 2% is something that all of our raises, annual raises, and everything you can keep up with.
Sustained 2% inflation over time, people would be doing better. The path to 2% inflation is rather painful.
Yes.
Yes. Yeah. So, and then also Jerome Powell made the comment today that his stance on his viewpoint is that the window to a soft landing has narrowed. It was already narrow to begin with. It was very narrow. Chances of a soft landing were already next to nothing. It's never in the history of ever.
The chances of a soft landing were transitory, Brandon.
Yeah.
And now they're just gone.
we moved past them. And then to kind of add to what you were saying, look, you think this winter's bad? We've still got Russian fuel in the system right now. Wait till next year. If things are still going the way that they're going, wait till next year. The oil shortage next year and diesel shortage next year will be worse.
Right. And there's so many pros and cons to this whole Russian oil situation there. It's so hard, man, because we need that oil for the economy. We're dependent upon the diesel from Russia. That's where you get a lot of it from. We had a lot of refineries over the past few years shut down because they just weren't that profitable. And so we shut down those US refineries, and now we're not making enough of it here. It's such a hard thing to do and say, and then tell people, well, we need to switch to electric cars anyways. And I've always said from day one on this podcast, that just hurts the poor, the people in apartment buildings, people renting. I mean, if you live in a condo or a townhome, you don't have an electric charger hookup ready for you unless you have your own garage.
Right.
You're hurting the poor population of the United States by forcing them to get electric vehicle that they can't plug in and charge.
Yep.
You know, and then you're forcing us to fly in more airplanes, which cannot fly on electric yet, because we can't take long road trips with effectively with electric vehicles. They take longer. Longer road trips take longer, and so now you're going to have more people flying.
And Ubering. Uber might be a big beneficiary here, actually.
Is there going to be an Uber bus like Greyhound? Are they going to buy them up? They have like an autopilot.
Yeah, they had
Go
a
from station to
relatively
station.
they had a relatively decent quarter. So maybe Uber's a buy as well. I don't normally buy companies that have negative EPS, but Uber might be there right now. So
I don't know, man. So I mean, when I look at the situation, I mean that's what I'm thinking. Yeah, I think I was wrong about the low in October, even though I was right at the same time. You know what I mean? I was
short
wrong
term,
and I was
medium
right.
term, yeah, you were right about maybe the lows for the year. It really wouldn't surprise me if we start to test it, the lows throughout November again, and that we go into another little mini Santa Claus rally, especially if the Fed only does 50 points in December, which is possible that, they do a 50-point raise in December and then maybe take some time off and let the lag catch up. That's possible that happens, and that could trigger a rally. But then we're going to start to see the effects of these rate increases on the overall economy sometime next year. And that's probably going to put pressure on stocks again. So here's the thing, Dave, and this is technically our Halloween episode. But I promise you, I am not bewitched or possessed by anything when I say this. Bonds are looking pretty good right now.
What? Whoa!
In the municipal market, in particular, you're buying into weakness, and then if deflation does kick in, like the Federal Reserve wants, you can sell into strength at the end of next year.
Wow. I never thought I would hear that after your whole rant last year.
And then
bonds are dead.
You sell into that strength, and now you've made at least a little bit of money. Single digits probably on your gain, but you've made a little bit of money, and you got a little bit more money to buy into potential recession lows.
That's a good plan, man. And a lot of people have lost money this year. At the beginning in January, Brandon, you got on this podcast, said 85% of all retail investors are probably going to lose money this year. There's actually been a 20% drop in all retail investors out there that have just completely closed their accounts and left investing because they got in during the hot 2020 market when you could throw a dollar at anything to make money, and they thought they had this all worked out, and then they started losing money and they gave up and packed up shop and went home.
And yet you still have to be careful, though, even buying municipal bonds, because a lot of cities are run by idiots. And so there's probably going to be some that are going to be, having some trouble. So you really need to be careful and do your research on those as well. You can't just buy any, municipal bond and expect it to pay off. You've got a lot of cities around here, school districts and municipalities right now are having troubles if they don't pass levies, and they're going to be broke. So you need to do research on that as well. But yes, I've in the past been very bearish on bonds, and over the long term, I still think the S&P 500 outperforms 5 to 10 years. I would put my money on SPY doing better than the municipal bonds and even grade A corporate bonds and things like that. But why not make a medium term trade on it if you think it's going to do well? Why not?
There you go. All right, man. I want to spend the last few minutes here real quick on a quick story. I know we're just going to hit this. We're going to touch and go on this. We're going to leave it up to you guys to dig in, do some more research. That does something for you. I don't usually get into media companies, but I do want to talk about this media company right now. It's a media company that did a split recently, and it is the Murdoch's family, News Corp and Fox Corp. So they did a split a few years back, and now Rupert Murdoch, as he's, I believe it's because, and this is just speculation, he's getting older and he wants to combine the companies back and consolidate it under his son Lachlan Murdoch and make him CEO of everything. The family, though, has come out and said that they want to do this because of the money that is to be made off all the sports betting that's been going on. My problem with the whole sports betting angle on Fox is there's so many companies out there with sports betting now that more laws have been relaxed, and you can only get so much money out of the people that eventually, eventually you just all take a market share from each other, and you're not really growing the market share because how many more people are going to be betting, or are we, or am I just being naive and we just have a gambling society that I'm unaware about? I mean, you look at the $1.2 billion Powerball. I look at Fox Corp combining companies in order to make a play on sports gambling and the sports gambling apps. I don't know, Brandon. Am I being naive, or do I believe that it's oversaturated with companies right now, and I think some of them are going to fall?
Yeah, no, you're right. You're correct.
Good,
And
yeah,
it's ripe for consolidation.
yeah.
So
That's
streaming.
that's the better term, right, for consolidation. But yeah.
So
So
streaming. I wouldn't be surprised if somebody bids for Paramount. The CEO is the daughter of the previous. I know she really like thinks of it as a family owned business, but sometimes money can talk.
Paramount and Showtime, I believe, are going to be the merger there, but I want to I want to go back to this sports gambling thing. There's a lot of sites out there. I know last year, early last year, right before football season, I said Penn Gaming was looking good, DraftKings was looking good, and then I came back out and said I made a bad call. They're not looking good at all. They were overhyped going into last football season. Overhyped. I was caught into the hype. And everybody thought that this was going to, because this was the first full, last year was the first full season that we had all these different avenues of gambling available and quick and easy, and it was all different, right?
Mhm.
And we thought that to the moon, right, with everything else. Well, they didn't go
Not
to the
me.
moon. They didn't go to the moon. Not as many people were gambling. They weren't making as much money as they thought. And so, and are they taking money away from casinos? Do you short casinos now with more of these companies moving to the sports gambling? I mean, you have Disney making a deal with it with DraftKings, isn't it? And them, and now you have that gambling going on. I mean, so now are the casinos no longer getting this kind of cash flow coming in? Does it hurt them, or do they not care because they still got the people who play poker and roulette and what have you? And I just can't believe. I mean, I probably think I'm being naive, but I can't believe there's that many gamblers in the United States.
COVID made that happen. People got bored and then people got addicted to gambling. But if you
Uh,
remember correctly, our first of the year episodes, one of the phrases I said should die a horrible death was "to the moon."
and here I am still using it.
I know.
All
But it
right, all
did
right.
though,
So
because nothing's to the moon anymore, right? Everything's become more reasonable.
and right, and Bitcoin has become more reasonable, but that's just another topic for another day. All right, guys. Like I said, that was just a short little hit. You guys look into it. See if you want to buy Fox News Corp or Fox Corp there, because that merger may happen. Other than that, Brandon, final thought, man. Go ahead.
I think Google might actually be set up for a nice fourth quarter beat. Um, with the economy still running strong, of course, it means that the Federal Reserve's still got to raise interest rates, and people don't talk enough about the $95 billion of that's coming off of the Fed's balance sheet every month. I think that's having more of an effect than the interest rate hikes. But with that being said, if we're still at 3.7 on percent unemployment, sub 4% at the end of the year, people are still going to be spending money going into January. So ad dollars for Google are going to be nice. I think for the fourth quarter, they guided low, and I think they set themselves up for a beat. So we'll see what happens here. But we've also got the midterm elections. Both Meta and Google, especially YouTube, are going to benefit from political ad dollars being spent in this quarter. So I think Google's buy right now. I do. I think you can leg into it. And there's a lot of people right now saying that, well, the leadership in the market has changed. Yeah, temporarily it has, but there isn't anybody that right now at least can't convince me that once we do come out of all this mess, technology is going to be the leader again. People aren't going to go buy, you know, Wells Fargo or Bank of America to lead them out of a recession. It's going to be the growth companies. It's going to be technology. It's going to be things that are going to lead our economy into the future. So, you know, you can start legging into these companies right now. Nobody knows where we're going. Nobody knows how this is going to end or when it's going to end, but we just know it will eventually. So
perfect segue into my final thought. Growth companies are going to lead us into the future with innovative technology. Do I know a company like that? Yes, I do. I made a call on this podcast. Is Tesla. Tesla is exactly every high point Brandon just hit. It checks them all, checks all those boxes. At $2.15 a share, I think it's a buy. I'm going to start positioning myself into Tesla. I believe in more into the long term with that company because there's so much going on. And then if I could just buy stock in Elon Musk, I would, because
I just want him. I want to see it be easier for him to hit his ambitious targets. I don't want it to be, you know, the employees and him sleeping on factory floors for a month to try to push out, you know, enough electric vehicles to hit the targets that he said for, you know, that he would hit. And I don't want to see, I know COVID happened and it pushed a lot of supply chain issues backwards, but, you know, the supply of the Cybertruck is going to enter production next year. That's 2 years past the initial target date that he had for this. So start hitting those target dates and I'll be a little bit more comfortable with it.
So, anyways, before I was rudely interrupted, they wouldn't be called ambitious targets if they weren't ambitious. I like that he sets goals and not easy goals and doesn't just lower expectation and over deliver like Apple. But he actually goes ahead and then tries to hit high ambitious targets. I appreciate that and that honesty from him in that regard. So Tesla, yes, that's my goal there. Keep a lookout for the headlines, guys. Everything we talked about today has been on a news article one way or another all over the news. That's how we make our trades. You guys kind of got to listen to us today talk about these different things that are happening, live events, macro. I call them macroeconomic events instead of micro. Usually it's Brandon with the microeconomic events, looking into fundamentals, the numbers. Today was all macro. So let us know if you liked it, if you liked how we did it, and give us some feedback. We appreciate it, good or bad. Having said that, guys, as always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.